Long-term outlook for foreign stock markets. I'm Rich Paz for Critical Points, April 27. All right, let's take a look at the China Shanghai Composite Index, which is still my number one index, but I'm sometimes concerned it's not the best one, but haven't got off the fence of what would be the best one. Any rate, we still show this as a minor long-term bottom, okay, back in 2018. And we thought we had a long-term bottom in here. And when it violated first, we said we can just give it a little more time. Well, the problem now is it's looking like it's taking too long, okay? It's too many years, and it's too many months, and it's too many patterns of business cycles. And we're really concerned the long-term bottom was back in November 2020, which is really too short, yet it fits, it works. If it was later, which would probably be a little more ideal, then we got an issue that it won't bottom the next time around until later than what we're showing you. So there is risk this could be a long, drawn-out bearish affair for China. But currently, the model's saying, okay, let's go with this low, take it one step at a time, and call it the earliest. And what it's saying is July is the earliest for a minor long-term low. And unfortunately, the U.S. has already seen one opportunity. The second opportunity for a long-term low probably also begins around July. So we could be bearish in the U.S. into July, and we'll talk about that more in monthly updates, weekly updates, and whatever. Any rate, concerned that China may just be down all of this year. May not even bottomed early next year, okay? So, and it's certainly fallen a large amount. Now, what we don't know is don't have the fundamental understanding of these foreign countries' indexes as much as we do with the U.S. So maybe someone would make an argument, well, if it's not going to bottom for months from now, it really doesn't have to go any lower than this. So it may just start a trading range. And we don't have much for up the downside objectives. We can do some technical stuff, a point and figure in here, and show, yes, it can go back here. It can go all the way back to here, okay? So now it is oversold long-term, but you know my stance that I don't trust long-term technical indicators that well. But it is something to consider that is long-term oversold. It's trying to narrow for a buy signal, but it's going to take a positive monthly reversal to make that indicator look right. It's like the indicator's too soon. Okay, so I think there's probably more downside into May at least for China. And frankly, I think it's probably down into July or later, and then we'll reevaluate. So I'm not convinced the U.S. has to be worried over China, but maybe it should be. This is a big drop, and they still have COVID issues over there. They haven't fixed it like many other countries. They haven't done as good a job as us. On the other hand, you could argue they're working harder at it. They're very worried over it and trying, okay? And then, of course, they've had their own real estate blow up and their own financial issues, but they've also tried to create some of those issues. They've been trying to make sure their stock market really isn't all that profitable because they're scared of it setting up like a 1929 scenario. I think they feel like they want to be smarter than the rest of us and just not let the stock market become overly bullish and create some crash scenario. And this may be like an overreaction and making things a little worse for them right now, okay? As far as their economy, they've also had some issues with their PMIs and how well they're doing, okay? So that's our China scenario. So now what we want to do is flip over to Europe, and we're going to go to the German DAX. Now, the German DAX, we've called a minor long-term bottom in place, and this is the pattern. Looks very similar to the U.S. The problem is that was such a fast drop and such an explosion, and then with the Russia-Ukraine deal, we really haven't seen that much of a negative fallout from it. And now maybe it was too fast of a recovery relative to that. It was, they overreacted to the overreaction of dropping as hard and fast as they did, okay? And I just wonder if it has to backfill. We see this sometimes where they slam it down, slam it up, and then over the next few bars, the next few periods of time, doesn't matter whether it's minutes, days, weeks, months, years, it can just backfill here. So I'm not convinced that it's going lower than what we've already seen. It may have bottom long term and it just needs to stall out, backfill a little bit. Or maybe it hasn't bottom long term, but it doesn't need to go any lower, but it still needs to backfill. I just don't like the setup. I don't think the next bottom can occur till May, something similar to the US market. I think there's more downside for the German DAX. We just don't know how much. Looking out to 2024, almost all of these indexes around the world look as though they will be bullish, that they are going higher. But the point is, there could be issues lingering here this year. We were hopeful for long-term bottoms early this year, get it out of the way. Now it's looking less likely for the world and the U.S. Here's the French CAC. Same story. Slammed it down, slammed it up. Now it's starting to work lower. Not as weak as the U.S., but it may drift lower. It probably is not going to bottom till May, maybe for a level 2. And unfortunately may not bottom to July to level 1. And that's not saying it goes any lower, but just how bearish can it be. I'm a little concerned. The market didn't really want to believe in a bear market. They slammed it down, recovered. Now I'm just wondering if this bear market isn't extending, lasting longer. Okay. Next, let's go to the... Okay, here's our India index, and I just realized one of the indexes I've been using hasn't been updating for quite a while, and I got to delete that out of our list here. Not sure why bar chart changed that, but this is the Sensex India Stock Index, and we're thinking that it also has topped long term. It also could have bottomed here long term. The problem is, just like the rest of the markets, it may come down. I think there's safety and relative strength in the India index. I'm more concerned with what's going on in Europe and Asia and US and a few other regions of the world. Not that concerned with India, and I think it'll be higher later on, but I can, at the same time, for any of you who are a little bit concerned, it may have to consolidate. It may even have to come outright down into a long-term bottom yet, but I'm just saying it has held up better than anyone else in the whole kind of world, and it may have already bottom long term. We just don't know. What I can tell you is it ought to pull back into a May bottom. So on an intermediate to short-term basis, probably similar to the US, Europe, China, but on a long-term basis, it can show relative strength, and it is one of my favorites for super cycle bull markets. Here's the Japan Nikkei. Now, frankly, we think the level LT3 long-term bottom, and it's only minor long-term. It's a 3 to 4 year business cycle. There'll be 4 to 6 of them during that whole decade economic boom-bust cycle, okay? And we think it's bottom, but it's probably also going lower into May, right along with the U.S., and then higher, okay? And we can't rule out something goes wrong and it revisits this low and puts in a long-term bottom later this year. Any level 1 is eligible for bottom for any of these markets all the way through July and maybe all the way to the end of the year. This could literally be a go-nowheres to bearish year for all stock markets. But it looked like to us, the U.S. at least ought to bottom early, and it did. Then the NASDAQ, as of this week, just took out the low for a new low of the year, telling us, well, maybe it's not until July or a bit later. And that also puts back on the table a chance that it can be a bear market year, but we just don't think it'll be bearish that long. And we think the U.S. can be more resilient and better than the rest of the countries in terms of how long a bear market will last, meaning it ought to be shorter for the U.S. than anyone, in our opinion. But there might be more downside for the U.S. here because we had such a blistering bull market the last 2 years here. All right, what else can I show you? We want to go to Canada. And this is actually a fund, I believe. I also have the Canadian index. I was going to look for it quickly here, but disappointed, okay? Sharp reversal here. We may be off the mark. This may be a late minor long-term top, or it may be that we've seen the minor long-term top. The trend highs are higher into 2024. Unfortunately, the market has changed its mind and coming down for a minor long-term bottom. That probably won't show up to May, may not even show up to July or even August. So warnings, we were all bulled up, very excited for Canada, and now it's falling in line with the U.S. and the rest of the world here. And I think it's best to be very cautious and careful at how you're dealing with Canada. Now, this is the South Korean Kospi. Now, it's corrected enough and had a lengthier bear market than many of the indexes around the world, and of course with the U.S. If anything, it was like the U.S. mid-caps, small caps that we're in a bear market in 2021 into this year. It was really just our major indexes actually moved higher. And now the major indexes are moving lower and kind of catching up with what probably started as a bear market last year for much of our U.S. stock market. Well, interestingly, South Korea is kind of going along with that. All right. So we also may be early on our long-term call for a bottom here. And in theory, it can bottom May, June long term. But because it has the same timing for the U.S., I wonder if we're a little bit off here and it can take even longer later this year. But right at the moment, let's just give it May, June. But it may not even bottom to July along with the U.S. I think the way to approach this is kind of back off a little bit, be a bit cautious here. But if it starts taking out highs of last month and more likely the high in February, okay, that would probably be a sign of a long-term bottom. I'd feel more comfortable with it. The monthly indicator is trying to reject any weakness here, and it's certainly not as weak as the rest of the world and the U.S., and I think it's because it corrected so much already. I think it's probably better value and could be more resilient, okay? So I like this index. I think it's a little safer than some of the others, but we may still have some issues and problems from it over time here too, because it's like the whole world's kind of changed its mind saying, well, we turned optimistic, but now we're a little concerned here where we're going. This is a Russia index. Actually, it's a Russia. That's a fund of Russia. And of course, it's just crashed here. This is the actual index, I think, and crashed, trying to show some support here. I don't think it can put a long-term bottom into a little bit later this year, but it may have seen the lowest it's going to go. It may just need to pull back, consolidate a little bit. What else do we have? This is a China 300 fund, and it's a 2X fund, and you can see it's even showing its gap and lower, looking pretty weak here. So the foreign markets have issues, all right? We're not friendly to foreign markets, but for some of those markets, it's only that they're kind of going lower in sympathy with the U.S. Europe markets, however, make me a little nervous that maybe they were doing their best to shrug off the Russia-Ukraine, saying, we'll get through this, it's not an end-of-world scenario, but maybe now they're worried about lingering after effects, all the sanctions, what will it do for their economies. Flash PMIs showed that the Eurozone did better in their service industries, but their manufacturing was off. But that makes sense relative to their high energy prices, sanctions, the Russia-Ukraine deal, okay? Overall, I thought the Eurozone PMIs look pretty good. We will get official PMIs for the world come May 2nd for manufacturing, and then a few days later for services, okay? You want to go to marketeconomics.com for that. And market is spelled M-A-R-K-I-T, marketeconomics.com. So at any rate, bottom line is if you're investing in the global scene, there's been some people thinking that's the better bull move for the next year or two, and I'm not so sure about that, okay? And then some were saying, well, you might have less risk. Well, maybe, okay? But I really do think the world's just going to follow the U.S. Lower here, and I'm a little concerned the U.S. does have some issues. Now, Portugal, I've been saying actually I want to be a long-term bull in Portugal, and that's holding up better than some of the others. I like that. I like how they run their society. Yes, it's a little bit socialistic, but I got a feeling they're going to prove that's the better way of going for the entire world for the rest of the century. Just a little personal slants of opinion here of what are the better systems. Socialistic plus capitalism plus free market plus democracy. I think it's probably the better scenario here for the world, if not even the U.S., for the rest of the century. And it may take us a decade or two to get there, but I think we're evolving that way. And I think Portugal is kind of the head of the pack here for the rest of the world, and I think it can do okay. All right, so that's pretty much all I've got for you, the global scene here. It just feels like, yeah, the whole world's going higher when I look out to 2024, when I look out for this decade. This is not an end-of-world scenario, but unfortunately, I think we're in mud, it's slippery, it's fuzzy. We got complications and problems that may last throughout this year, but I think it'll be over by July, and hopefully it'll be over here by May even, but we will see. We just have some issues here. that we just have to deal with on this geopolitical issues. It's not just Russia, Ukraine, it's also China, Taiwan, China versus US, China involved with Russia, Ukraine. There's just some geopolitical issues here. But you can just see, as we warned you, more about the US and the US markets, it was time for the economies to turn down. They were supposed to be bullish and grow 2020 into 2021. And in 2022, the economies were supposed to back off. The PMIs have backed off. And we thought we were going to get over and done with it, at least in the US, very quickly. And now it's looking like some things are changing on us, a little slipperiness. At least people are going to be nervous about the future. And some of this also is the battle over inflation. But in terms of the world, the battle's mostly in the US because we did the worst. Even though there's countries out there 50, 70% inflation, they've had problems for years, so people kind of just discount them. When they look at the more developed nations with their stable economies, US is the worst on inflation. It jumped the most, okay? Not necessarily the highest, but it jumped the most. And now the US is going to declare war on it. The rest of the world's saying, we're not so sure we even need to declare war on inflation, but yet at the same time, they'll probably work at it, and they'll also raise their interest rates. Well, it's just creating some concerns. How is this going to work out? How long will it take us to correct this inflation story when, in fact, the world economies are growing and the U.S. economy is growing? But what kind of risk do we have that maybe we're paying too much for stocks and we can buy them just a little bit cheaper? And at least in the last few days, it looked like the world and the U.S. got on board as saying, I think I'll just sell for a little while and see if I can buy it cheaper. Past results are not necessarily indicative of future results. Thank you.